Testing, testing.
1, 2, 3. 1, 2, 3.
It's Financial Information Month in the Eastern Caribbean Currency Union. Financial empowerment through education. If you don't know what that is, let me tell you all about it. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Help build the region's economy. Work to financial security. Prosperity for all of we. FIM is for you and me. FIM is for everybody. So tell your friends and your whole family. Financial empowerment through education. Build yourself and the entire region. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Financial Information Month. Financial empowerment through education. It's Financial Information Month in the Eastern Caribbean Currency Union. Financial empowerment through education. If you don't know what that is, let me tell you all about it. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Help build the region's economy. Work to financial security. Prosperity for all of we. FIM is for you and me. FIM is for everybody. So tell your friends and your whole family. Financial empowerment through education. Build yourself and the entire region. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Financial Information Month. Financial empowerment through education.
Welcome to the Financial Information Month FIM Festival 2022 Virtual Business Symposium. Today, we will have two presentations. First, we will hear from Mr. Trevor Blake, Managing Director of the Eastern Caribbean Securities Exchange. He will be presenting on investment in securities. Then, Dr. Daniel Joseph, blockchain researcher and data scientist, who will be presenting on cryptocurrency. I would like to welcome our viewing audience on FIM Festival Facebook page and ECCB Connect YouTube channel. You can participate by sending your questions during the Q&A segment via Facebook and YouTube. The questions will then be directed to the presenters. My name is Jacinthia Teixeira, and I will be the moderator for this afternoon's proceedings.
When the ECCB took the bold step to introduce Dcash, the people of the Eastern Caribbean Currency Union were at the heart of this decision.
It's about creating opportunities.
It's about connecting family.
It's about linking friends.
It's about changing the way we do business.
It's about transforming lives.
A journey to a place where none have gone before will not be without its challenges. But challenges will not deter us from our goal.
It's about me.
It's about you.
It's about all of us.
So join us and let's make history together.
Trevor Blake is the Managing Director of the Eastern Caribbean Securities Exchange Limited, ECSE, and its subsidiaries, the Eastern Caribbean Central Security Depository Limited, ECCSD. Prior to joining the ECSE Group in January 2005, Mr. Blake held the position of Director of the Financial and Enterprise Development Department of the Eastern Caribbean Central Bank, ECCB, where he held direct responsibility for the bank's money and capital markets development program. Mr. Blake is the Vice President of the Association of Central Securities Depositories of the Americas, ACSDA, and a member of the board of the World Forum of CSDs. He is also the Vice President of the St. Kitts and Nevis Chamber of Industry and Commerce. An active Rotarian, he is a past district governor of Rotary International District 7030. Mr. Blake holds an MBA Financial Studies from the University of Nottingham and qualifies an associate of the UK Chartered Institute of Bankers. Mr. Trevor Blake, Managing Director, ECSE, Grow Your Wealth, Protect Your Financial Health, talking about investments in securities. Mr. Trevor Blake.
Thank you, Madam. Thank you, Madam Moderator, and good afternoon to everybody who is listening, watching, in any way participating in this symposium. It is indeed a pleasure for me to be here again another year, participating in the Business Symposium. The Financial Information Month is an important part of our development, our operations at the ECSE, and I am always pleased, I should say, to participate in these events. Today, to talk about growing your wealth, investing in securities, and the organizers have identified a number of subtopics that they would like us to discuss this afternoon. Savings versus investments, or savings versus investing, why investing matters, what are securities, what is the securities market, looking at the risk and return relationship, and then finally investing in securities. So the first one we look at is savings, and I don't quite like savings versus investing. I would want to look at it as savings and investing, because it is not a zero sum. It is not one or the next. I think we need to do both. And what we see, it is important for you to have savings even before you start investing. It is from the savings that you would accumulate that you would have the funds necessary to invest. But if you look at the differences between them, see that the savings are more geared towards short-term goals. It's low risk, it's relatively passive, it's safe, and it's aimed towards preserving wealth rather than necessarily growing wealth. Investing, on the other hand, is geared towards long-term goals. It's higher risk, but because of that higher risk, you will get higher returns. You should be actively investing and not merely just sitting on what you necessarily have. And of course, investing is what creates wealth. And we should all be looking to create wealth for ourselves, our families, and the future generations. It is important that we not only save, and most people do have some sort of savings. They have a bank account, maybe a fixed deposit, and things like that, the credit union accounts, etc. And those are important because it's important that you continue to save, that you practice savings as a discipline that you put aside a certain portion of your income, and the rule of thumb is, say, 10%. And you put that aside so that and maintain that for the rainy day, for the time when you're perhaps not working and then need to call on your savings to take you through until the next job comes around. As well as for sort of short and intermediate goals, if you want to take a vacation, if you want to buy some particular asset, you save towards those things, and that is important. But if you want to create wealth, you have to get to investing. And I have a graph here that shows the difference between savings and investing. We see, and this graph, while it's from a different market, I think it sort of mirrors what happens in our market pretty good. We see savings account, and the pink section of the graph is the return on savings. So if one is to save 200, and in this particular case it's euros, 200 euros monthly at 2%, and that is the rate we get on our bank accounts in the currency union. So if we were to save at 2%, save $200 a month, you see over 40 years, that will grow to 143,000 euros in this case. However, if you were to invest that $200 a month, and they were able to sort of mirror the S&P index, that same $200 a month will actually grow to $1.3 million over that 40 years. So this is a significant difference. So again, here we are making the case that you need to start to invest if you want to build wealth. So why does investing matter? Well, I just showed if you want to build wealth, the only way to do it is by investing. Nobody has ever saved themselves wealthy. And if you know anybody who has done so, then you could correct me. But not to my certain knowledge, nobody has ever saved themselves rich. You get rich, you build wealth, unless, of course, you inherit some a windfall, or if you win the lotto. But you get rich, you get wealthy from investing, not from savings. Of course, you have to save to get to the point where you could invest, but you get wealthy from investing. So that is why it is important to invest. You have to start investing if you want to build wealth for you, your family, and your future generations. What are securities? That is the other thing that we have identified to discuss in this particular presentation. Securities are negotiable financial instruments that hold some monetary value. There are two basic features that identify securities. One is that they give certain rights to the owners of these particular assets, and secondly, that they could be traded in financial markets. And we see on the other side the image which shows the different types of investment that you may have: stocks or equities. We have bonds, mutual funds, ETFs, derivatives, hedge funds, etc., etc. These are all financial assets. These are all securities that give rights to the owners of these particular instruments, and they are traded in organized exchanges. So securities are a medium of holding value, of maintaining value, of ensuring that one could invest. They are the medium through which one invests. The next matter is a securities market. And a securities market is simply a venue for buying and selling of securities. It is a market just like the vegetable market that you go to buy your vegetables. You as a householder will go because you need the vegetables to maintain your healthy lifestyle. So you go to the market to buy the vegetables. The farmers produce vegetables, they grow vegetables, and they bring them to the market to sell them. A securities market is pretty much the same. People who issue securities to raise capital, bring them to the market to sell to you. You who want to invest would come to the market to buy these securities. So it's a market just like any other market that you would have. The difference is the goods that are bought and sold in the securities market would be financial instruments. And then we look quickly at the risk-return trade-off. And I want to posit here that there is a positive correlation between return and risk. And we see the graph here, where we're on one end, on one axis, we have return, and the other axis, the horizontal axis, we have the risks. And risk is nothing more than uncertainty. Yeah, you hold something, you don't know what will be the end result of it. If you hold securities, depending on the type of securities, over time, the values of that could change, and you may not know what that change would be, whether it would be positive or whether it would be negative. Some types of investments, and if we look at the other graph, some types of investments have very, very low risk, things like bank deposits. Once you put your money in a bank, unless something, goes radically wrong with the bank and it has to fold, you will get your bank deposit back every time. So if you put $100 in the bank and you do nothing else, and you go back to the bank 10 years from now, your $100 will be there. Your principal will be preserved. So that is what we call a safe, low-risk investment. But the return on that is typically low, because as we said, there's a positive correlation between risk and return. But when we go further along and we looked at more higher risk instruments, we see that the potential for return is significantly higher than the potential for return on those safe investments like bank deposits. And as we go up the chain, we see we move from the bank deposits to government debt. Those are relatively safe again. Again, the return not very exciting. Corporate bonds, a little less safe because companies could go bust or go bust more readily than a bank or the government would go bust. So those have a little more risk, but again, the return is steady. It's a fixed return, and that is the return you will get over the life of the instrument. Well, when we start to go into other forms of securities, more risky securities like mutual funds, equities, and even at the higher end, the venture funds, we see that the potential for return is much higher. So to get wealthy, one has to invest in some of these more risky instruments like equities, venture funds, etc. But one has to do so in very cautiously, in a responsible way. One has to do so understanding that there is the risk and to try to manage the risk using different methods, things like diversification, ensuring that you don't have all of your funds in the same basket. You would want to ensure that you have good diversification to manage that risk that exists in any form of investing and any form of securities. What are the opportunities then available to us in the ECCU? In the ECCU, really, the only game in town is the ECSE and the markets that it hosts. In the ECCU, we have the Eastern Caribbean Securities Market, which is a market for the trading of all securities. And then we have the Regional Government Securities Market, which is a primary market where governments come to issue securities. And the difference between a primary market and a secondary market is that in a primary market, issuers issue securities for the first time. So new securities are brought to market in the primary market. And then those, once they are issued, those are then traded in the secondary market. So on the ECSM, on the Eastern Caribbean Securities Market, we do also have a primary market platform where companies bring new securities to market. Things like IPOs and APOs are done in the primary market of the ECSM. So this is the only place, essentially, that you could invest in securities that you could be reasonably assured that these are going to be safe, that you will get a positive return, that you could sleep comfortably at night knowing that your securities are pretty safe. I say that because too many times we've seen cases within the currency union, and just a few weeks ago, somebody in Grenada was calling me about a particular investment they had made in a company. But that investment was not made on the ECSE. And they can't hear anything about the investment. They get no return from the investment. However, if the securities are listed on the ECSE, you are reasonably assured that, one, the company will be responsive, two, the company will pay dividends over time, and if the investment is a fixed income, like debt securities, that you will get your return on that investment over the life of the instrument. So on the regional government securities market, we have some 5 governments that issue securities regularly on the market every single month. And most weeks of every month, there are auctions of securities, of government securities on the regional government securities market. Again, that is an option for investors, especially those who may be a little less risk averse and don't want to get too risky, but want to get a better return than they would get on a bank deposit. Then they could invest in government securities, government bonds. And these we have maturities ranging from 91 days to over 10 years. So wherever you fall, whatever your needs are, you can get a security that would meet your needs. So you have diversification as well on the regional government securities market, because we have some 5 governments that are issuing regularly. And so you could have geographic diversification, and you could have diversification across maturities, because you could invest in 91-day instrument, 180-day instruments, 365-day instrument, going up along the tenors right up to over 10 years. So anything you need, you could reasonably get on the regional government securities market and on the ECSM. In terms of the companies that are listed on the ECSE, well, in terms of overall listings, we in our market, we have some 166 securities listed, most of which are government bonds and treasury bills, etc. And those, we have about 150 instruments listed with a value of around $3 billion. We have 12 issues of corporate paper issued by the ECHMB, in fact, and that the value of those instruments is something we're in the region of 400 or over $400 million. And then we have 14 equities listed with a total market cap of about $2.3 billion. So that gives you a sense of the depth of our market. When we look at the equities by sector, we see again, we provide a broad range of sectors that could provide you with significant diversification. We see we have some 6 companies in financial sectors. In terms of sectors in financial services, we have 3 in utilities. We have 2 in the trading sector. We have 1 each in energy, in real estate, and in telecommunications. So again, across the range of product we have, it provides significant opportunities for diversification. And you remember, the reason why you want to diversify is to try to manage that risk that is inherent in investing. Geographically, again, when we look at the equities by country, we see we have some 5 of them domiciled in St. Kitts, 4 in Grenada, 2 in St. Lucia, and 1 each in Antigua, Dominica, and St. Vincent and the Grenadines. So these, again, provide you with significant opportunities for diversifying your risk, ensuring that you could grow wealthy safely investing on the ECSE. And then how do you actually invest. The access to the market is really through our broker-dealers. And we have 6 broker-dealers in 4 countries. So in Grenada, we have the Grenada Cooperative Bank. We have in St. Kitts Nevis, we have the Bank of Nevis and the St. Kitts Nevis Anguilla National Bank. In St. Lucia, we have the Bank of St. Lucia and First Citizens Investment Services. And in St. Vincent and the Grenadines, we have the Bank of St. Vincent and the Grenadines and First Citizens Investment Services. Now, these broker-dealers are the medium through which you will invest in the market. So you want to invest, firstly, you go to one of these broker-dealers, and if you are in a country other than these 4, these brokers also offer their services in other countries as well. They're not limited to the country which they're domiciled, but they offer cross-border services. So you contact one of these broker-dealers, you explain to them your objectives, your investment horizon, your risk appetite, what are you saving for, what are you investing for, whether you are investing for retirement, whether you're investing to be able to purchase some major asset in the future, to provide university education for your kids, whatever it is. Your broker-dealer will be able to guide you as to how you go about structuring your portfolio so that you are able to meet the objectives that you have set for yourselves. The broker-dealers have principals and representatives that are all trained and licensed to do this business. So before somebody becomes a rep in a broker-dealer firm, they have to go through a training exercise that we provide in conjunction with the Securities Regulatory Commission, and they are licensed by the Commission to provide these services. They are licensed to give investment advice. They're licensed to hold securities for you, to structure and manage portfolios of securities for you. So to get involved in investing, and I would recommend that you all move swiftly forward to start investing in order to grow your wealth. You visit one of these broker-dealers, you contact one of them, and the information on the broker-dealers are readily available on our website, and we have it here on this final slide at www.ecseonline.com, and you visit our website. We have all of the information there where you could approach or the information that you will need in order to enable you to approach a broker and get started in investing. Thank you.
Thank you. Thank you so much, Mr. Blake. That was quite insightful. Do we have any questions, or I can jump in with my question? Okay. So something you mentioned, you said persons do not save themselves wealthy. They do not save themselves rich. Then you spoke at length about the different places and spaces where persons can invest. However, there's a lot of distrust in where my money is actually going. There are already high risk for investment. Right. So how do you speak to a layman about investing, about putting the $5 that they put away for the rainy day into something where they're not seeing that investment?
Right. Yeah. One of the things when this market was created, it was created to ensure that we would have a place where the public in the currency union could safely invest and build their wealth. There are a number of things that we did in preparing for the market. One, a Securities Act was drafted and enacted in the member countries of the currency union. And in that act established a regulatory commission to oversee the market and to regulate the market. The act provides for the conduct of securities business. It says who could do what in terms of securities business. It sets out what you must do in terms of of issuing securities. It sets out who could actually participate in doing securities business. In short, what we ensured that there was a robust regulatory framework to protect persons who invest in the market. As I said, there's risk in investment, and there's no investment that doesn't involve any risk whatsoever. But what we have sought to do is to ensure that that risk is manageable and that the structures are in place to minimize the risk to investors. So investors could feel comfortable in investing on the ECSE because there's a strong, robust regulatory framework that govern activity on the market and who could do what in the market.
Okay, all right, so there I get a sense of security insecurities now, that these persons are equipped and they know what they are doing with my money. You mentioned that investing is long-term. So back to the layman who is almost, for lack of a better term, ready to get rich now, or ready to see the growth of the investment now. What advice do you have for him, as investing is a long-term goal, it is high risk, but you mentioned high returns. So at what point do I see those high returns?
Yes, as you rightly said, investment is long-term business. To really benefit from investment and to get those, which could be described as extraordinary returns, you have to leave that investment for some time. As the graph I showed, which shows the difference between investing and savings, we saw a 40-year cycle where we are investing $200 a month. In savings grew to $135,000 or something like that, but to $1.3 billion by investing. To get that investment, to get that return, you have to leave the investment so that it could grow. It could benefit from what we call compounding. And compounding is when your money actually starts to work for you. So the return you get on the monies that you've invested starts to make money for you as well. So those returns reinvested and grow to give you that what we call capital gains. And that is where a bulk of the wealth that you will create would come from, that compounding by keeping the investment. And I just want to be clear here that you don't necessarily have to hold the same security because, as I said, investment, again, is active. And even if you're not doing it yourself, hopefully you'd have a broker or an investment manager who could do it for you. You have to look at where you could take profit and reinvest in other securities that could continue to grow. Because you may buy a security, it may go to a particular point, and that might be the max that it could possibly go. So you'd want to take the profit from that security and invest in another security that is growing so that you could get that capital gains over time. So, but the important thing, you have to leave the principal in investments, not necessarily the same instrument, but investments for a significant period of time, for a long period of time, so that you could get the real value from the market.
Thank you so much for that response. We have two questions from the viewing audience. What amount should the man on the street need to start investing in the ECSE?
Right. Again, I want to be clear here. Investing is not for wealthy people. Investing is for people who want to be wealthy. So you don't have to be wealthy to start investing. In fact, you could buy as few as 20 securities. And there's some securities, for example, here of those saying is one is $2 per share. So you could actually start investing with about $40 by going to your broker dealer. You would want to start investing with more than that, though. For for it to start to build, you would want to ensure that you have a good, maybe a few $100s that you could put in so that it could start to grow over time. One of the things that we are seeking to develop in our market, and this is imminent, I mean, I think we will see this pass before the end of this year, is mutual funds. And in these collective investment schemes, one is able to, especially the smaller investor, will be able to invest like maybe a fixed amount in a mutual fund every month, maybe even $50, $100 every month, and then that would start to compound and build the sort of wealth that you want to create. Whatever you do, you should ensure that you are consistent. You could stick to it. So you invest your money. It's as I said, it's a long-term arrangement. It's not, you don't invest to take it out in 6 months. You invest perhaps to take it out in 10 years for it to benefit from that sort of compounding and to grow to the levels you would want it to grow. So the man on the street could invest with a relatively small amount of money, $100 or two, I think is ideal to get started.
Thank you so much. The next question. The governor of the ECCB mentioned in his declaration speech at the start of FIM Festival 2022 that the people of the ECCU do not invest in the ECSE. In fact, only 1 in 25 does. What do you think is the hindrance?
Yeah, there are many factors that I think contribute to that. Culturally, historically, we have not been people who invest. We are people who save. The banks are flush with money, sitting in savings accounts, earning nothing. And I say nothing because when you look at the rates of inflation and you compare that against the 2% that the banks are forced to pay, because if the central bank doesn't regulate that, they'll pay even less. You probably are deceiving when you look at it. You're probably getting a negative return on your money in the bank. So by cultural factors, are such that we have to try to change behaviors, have to try to change culture. And FIM, in part, helps in terms of doing this, to get people attuned to the benefits of investing so that that statistic could change from 1 in 25 to maybe 1 in 10, 1 in 5, whatever you have. And I think it's important. The other thing is that we need more product on the market, and we are working towards that. As I said, the mutual funds will be, I think, a game changer in a major way in terms of ensuring that the smaller man, who may not necessarily want to or maybe feel intimidated walking into a broker-dealer to talk about investment, he could then go through the mutual fund and benefit from the pooling of that arrangement and benefit from professional management that he may not have the wherewithal to do. He may not understand how to determine which security to invest in. In the mutual fund, you would have professional managers who are able to do that for him. So we think the mutual funds will be a game changer in that regard and would significantly expand the number of persons who are investing in the securities market.
Okay. I have a fixed deposit at a particular. You mentioned something interesting, not so much a question, but more a statement. I have a fixed deposit in a credit union here in St. Kitts that I started maybe like 3 years ago, before the pandemic,
Right.
And I think I've gained $90 on my fixed deposit. So I will be speaking with you after to see how I can maximize that fixed deposit.
Yes.
All right.
Definitely, you should.
I will. So we have another question here. What is the ECSE doing to encourage the people of the ECCU to invest in the securities exchange?
Right. As I mentioned, we are doing things like this. ensuring that we try to spread the word of the market, talk to people about the benefits of investing, of how they could go about investing. We have a education and awareness program that we are running. We use our website. We have a number of media events. We have webinars, virtual webinars that we do. We started doing on a quarterly basis. We are big in social media these days. We have, of course, our Facebook page. We are on Twitter. We are on Instagram. We have a YouTube channel, which we are growing the content for that channel. So we're trying to do a lot to attract more and more people into the market by spreading the word as widely as possible.
Okay. You mentioned intimidation, which brings me to my next question. I heard about dealing with brokers to get into the exchange. That's my issue. How can you relay, how can you allay that concern?
Yeah, I mean, the broker-dealers, one really should not be intimidated by dealing with broker-dealers. The broker-dealers, for the most part, except for one, divisions of your banks, of your commercial banks. Most of us deal with those banks regularly. It's the same people when we go in to deal with the teller, when it's the same people. Same officers of the bank who are the broker-dealers, the persons you will go to invest, just like your teller. I don't think most of us are intimidated to go to a teller to withdraw money or to deposit money. There's no reason why, as well, we should be intimidated to go to the brokerage unit in the bank, in the same bank that we do business with. But we understand some persons, not that they are intimidated by the bank themselves, they're just intimidated by the whole notion of investing because of, I don't want to use the word ignorance, but I don't use it pejoratively, I use it...
Lack of information.
Precisely. They just don't know, so they are a little timid rather than intimidated in terms of going to discuss that with the world. But I would encourage everybody to try to get over that and to just raise the question. So when you go to the bank and you say, and you're at your teller, ask to withdraw your money, you say, hey, what about this brokerage division you all have? Tell me who I could speak to in the brokerage division. Tell me how I could get to the brokerage division. And I'm sure the tellers will direct you to where you want to go. And you will notice is the bank staff will deal with you and try to deal with your concerns. They could assist you. They could advise you. They're trained and licensed to do that. So they could deal with all that you would need in order to make good investment decisions. And sometimes and much of the world has gone, and the rest of us are following to online trading. And that is something we are discussing with our service providers to see how we could offer that. But I still think that there's a lot of benefit that one could have, especially for the smaller, less sophisticated investor, could get from going through a broker, because the broker could provide significant guidance to help them in terms of going through that investment process. Over time, then they'll probably grow to the point where they'll be able to do it on their own. But I think initially when you're getting started, it's important to go to your broker-dealer.
Okay. The next question, prior to asking the question, so I'm going to test your theory. I'm going to do it. I'm going to go into the bank tomorrow, and when I go up to the teller to withdraw my weekend monies, I will ask. There is a brokerage division, correct?
Right.
When can I arrange an appointment with them to speak about my future? That's the conversation I should have with them?
Absolutely.
Absolutely, okay, great. So, who are these brokers? Well, you answered that already. They're already in the bank, but who are they?
All right. Well, in terms of the institutions, they are, for the most part, some of our leading commercial banks that have brokerage divisions. So, and I listed them in earlier. In Grenada, we have the Grenada Cooperative Bank. In St. Kitts Nevis, SKNMB, and Bank of Nevis. You were. And St. Lucia, the Bank of St. Lucia, and the First Citizens Investment Services in St. Vincent and the Grenadines, Bank of St. Vincent and the Grenadines, and First Citizens Investment Services. So those are the institutional brokers. The actual individuals who you will be dealing with, staff of these institutions that have been trained by ourselves and the Commission and licensed by the Commission to do brokerage business. So they're trained to give investment advice, to guide you in terms of how you would invest, what you would need to do, what all the requirements for investing, to manage your portfolio for you. So they are licensed, trained and licensed to do this business, these individuals within those brokerage firms.
Thank you so much, Mr. Blake. I think we all enjoyed your presentation and the conversation that we had. I think persons viewing are a little bit more intrigued and interested in getting into investing. You mentioned $2, and I think that's a good place to start. You mentioned investing maybe 100 or two, and I think that's even a better place to start. So thank you very much, Mr. Blake.
I think I mentioned 20 shares.
20, yes.
At $2
At $2 per share, yes. Thank you.
When the ECCB took the bold step to introduce Dcash, the people of the Eastern Caribbean Currency Union were at the heart of this decision.
It's about creating opportunities.
It's about connecting family.
It's about linking friends.
It's about changing the way we do business.
It's about transforming lives.
A journey to a place where none have gone before will not be without its challenges.
But challenges will not deter us from our goal.
It's about me.
It's about you.
It's about all of us.
So join us and let's make history together.
It's financial info.
Yes. Welcome back. Next, we will have Dr. Daniel Joseph. He is a distributed ledger expertise specialist in distributed ledger protocol research, innovation, and application. He is a highly quantitative data analysis in machine learning, big data, pattern recognition, and extraction of semantic structures. Dr. Joseph manages and trains a team of researchers in the creation of blockchain-based IP and patents and conducts research on distributed ledger technology. He has conducted research based on enhancing the functionality of distributed ledger technologies and extracting novel utility.
He has conducted research.
Dr. Joseph is an alumnus of the Alliance Manchester Business School, where he obtained a PhD in Business and Management. He completed a Master's of Science in Information Technology at the Manchester Business School, University of Manchester. He is the author of approximately 30 blockchain-related patents and/or patent application related to user privacy, decision-making, trustless swaps, document management, and sequence management. Dr. Daniel Joseph, blockchain researcher and data scientist. He will be speaking on How Much Do You Know? Cryptocurrencies, the risk and benefits. Welcome, Dr. Joseph.
Thank you. I assume everyone could hear me. Thanks for the great introduction. And yeah, there's very little more I can say about myself, apart from the fact that I'm also a graduate of University of West Indies Cave Hill campus for my undergrad. So I appreciate that. I've been asked to speak a bit about cryptocurrency. So that will be the presentation today. It's quite a bit to go through. So I won't hesitate to give too much more preliminaries. I'll share some slides. I'll share my screen. Just give me a second. Let me just. Okay, so the topic today is cryptocurrencies. As I mentioned, I'll talk